Hey, Kevin Brierton here. We're going to be unpacking and talking about should I pay off my mortgage early or have a free and clear house? You know, this is a common question we get is, hey, should I pay off my mortgage early? On the surface, it sounds amazing. Who wouldn't want to live debt free? But as a certified liability advisor, I think the better question is, will paying off your mortgage make you feel wealthier or is it just safer? So let's unpack this a little bit. Owning a house outright feels good and it's emotionally secure and it feels safe. But from a financial standpoint, it might not always be the right move and might not actually be the safest move as well, depending on what's going on in cash flow situation. Your home value is going to rise or fall whether you have a mortgage or not. The loan itself doesn't impact the appreciation on the house. It just changes where your wealth is stored. So when you have all your equity trapped inside of your house, it's a safe place, but it's illiquid. So that means you can't access the money without selling the house. And we'll come back to this in a minute. Every dollar that you have should be working and should be in the right place. So think of it in three different categories. You want to think of it as safety, liquidity, and return. These are important three buckets that you always want to think about. For your house, your home equity may feel safe if it's free and clear, but it's earning you 0% return. Liquidity, you can't easily spend the home equity unless you go get a loan, which takes paperwork, time, and there's risk of accessing that. You may not get qualified depending on what situation is going on. And also you don't ever know what rates you're at, what the market's like. Then the return. Once your equity is inside of your house, it stops compounding. So every dollar you could be earning elsewhere isn't compounding. You lose that compound growth and the opportunity to grow a secondary asset over the years that you own your house. So let's just say, one of our courses, we compared prepaying the principal versus investing the dollar elsewhere. So for example, if you were to apply $500 towards your mortgage each month right now, you might save 13 years in paying off your payments. So that sounds great. You might pay off your house sooner. But if you invested the $500,000 into an account where you are earning a return, let's say over the 30-year period, you'll actually have an asset that's growing as well as paying off your house. So I'm going to share my screen really quick and show you just a really quick compound interest calculator. Basically, if you took that $500 a month and you said, let's just start at zero, and you compounded that $500, let's just say over 15 years, and let's say a modest 6% return. Obviously, this is not investment advice, so contact an investment advisor for that. So if we calculate that, if you put in $500 over 15 years at 6% annual compounding, let's say, which is a conservative way, that'd be $139,000. Now you could take that money and then pay off your mortgage, but we'll talk more about liquidity in a second too. But let's say you did it over 30 years, that would be $470,000. Pretty staggering numbers. So the important piece here is the money that is in your house, is your money working for you or just resting inside the walls of your house? The power of leverage is really important. When you use it responsibly to leverage and borrow on a house and allow that house to pay you back in different ways, whether it's cash flow, whether it's appreciation, whether it's tax write-offs, there's different benefits of using a home loan, but also using your income and your other cash flow to continue to build elsewhere. So the bottom line is it's simply not just to be debt free, it's to be financially free. And also you want to keep liquidity available for emergencies. And the tax advantages of having a house and possibly having a mortgage, just think the government wants us to have mortgage debt. That's actually how the economy runs, is off debt. So if we play into that and use that to our advantage, it could be really beneficial. But the big takeaway here is you need to have access to money. So there's a financial piece to this that, yes, you grow your net worth. But one thing that a lot of retirees are undervaluing is the access to money when they need it. So if you have a paid off house, how do you go get $50,000, $100,000 in the event you need it, whether it's for kids' weddings, kid college funds, or medical expenses, or something that you just want to do for fun. Where does that money come from? Especially if you're on a fixed income, you're retired, you have a certain amount, maybe you have a certain amount even in your 401k. Where do you get some access to money? And it's your home equity. And there's a couple ways to do that: through a home equity loan, through a reverse mortgage, through a second mortgage, through a first mortgage, or we'd be happy to do a loan for you. Or you can just take that extra money you were using to pay down your house quicker and take that and fund a massive account that would be essentially your slush fund to use. So that's compounding over a longer period of time. Let's pretend you started doing that 15 years into your journey and you didn't compound those other 15 years. That's where the impact of the compounding is, because you were putting it towards a mortgage for the first 15 years or first 20 years when you could have been putting it into an investment that's compounding over the years. So I just say pause, take a look at the numbers, look at your opportunity cost on both, and look at your risk and reward on that. Ultimately, it's a tough decision, not an easy decision. That's why I wanted to record this, help you start thinking about what you're doing with the money and how it's going to impact the situation. Thanks again for watching. Catch you on the next video. Kevin Brierton, your certified mortgage planning specialist and certified liability specialist, and also your no excuse lender here at Kevin Brierton team. Super excited to educate you on this. We'll catch you on the next video.